How's it going, guys? Lawsy here, back with you on Options Brit. And today I've got something a little bit different for you. I've been doing a bit of reflecting over the weekend. I've seen a lot of posts flying around on X lately. People talking about options trading, the stock market in general, just how powerful this whole game can be. But here's what's wild. This stuff, this opportunity, this skill is treated like it's some kind of hidden treasure, like the financial version of the Holy Grail from Indiana Jones. You've got to stumble across it, dig through forums, watch 50 YouTube videos, and then maybe you unlock the secret. And well, that got me thinking, why? Why isn't even the basics of finance or investing taught in schools? I was chatting to a couple of family members over this weekend, trying to show them what I've learned, how this stuff actually works, and why it's a total no-brainer compared to traditional ways of savings and building wealth. But they were having none of it. So stuck in the grind, so conditioned to follow the path that society has laid out. Work hard, save in a bank, get a mortgage, retire at 65, probably 70. Any deviation from that, pure fear. And you can see it in their eyes. And that fear, even when change is clearly for the better, is what really holds people back. So today, I want to try something different. I've come up with a little analogy. Something simple, something relatable to explain why the stock market and even options trading can actually be way safer than people think. Let's see if I can break this down in a way that cuts through the fear, the myths, and all the outdated advice we've been given since we were kids. Let's get into it. Okay, so today we're going to dive into something a little bit controversial and a little bit funny. Barclays Bank. Yeah, the one with the shiny glass buildings might actually be riskier than the S&P 500. Yep, I said it. Now, before anyone throws a Barclays piggy bank at my head, this isn't financial advice. I'm not a financial advisor. I'm just some guy on the internet sharing what I've learned through experience and a few expensive mistakes. So grab a brew, sit back, and let's talk about why so many people blindly trust banks. Why that might not make sense. Why the thing we think is risky, like the stock market, might actually be the safer bet. Let's go. Let's take a walk down memory lane. From the time we were kids, we're told, get good grades, get yourself a cracking job, buy yourself a house. Whatever you do, keep your money safe in savings accounts. For most people, that savings account, it's a Barclays, a NatWest's, a Lloyd's, some big, boring, blue-branded bank. And the stock market? Oh no. That's for rich people or gamblers. The S&P 500 might as well be a casino in Vegas. But where did this mindset come from? Simple. We're not taught any different. No one teaches you about inflation or compound interest or how your safe savings account is quietly mugging you off. So, of course, we default to the brand we've seen since childhood. Barclays feels familiar. It feels safe. But familiar doesn't always mean secure. Let's unpack this word, safe, shall we? Most people think safe means my money's not going anywhere. It's a big bank, it's protected. Earning interest, that's good, right? Okay, sure, but let's look at the scoreboard. In 2024, a Barclays Cash ISA gives you about 4% interest. But inflation, that's been more closer to 6% sometimes. Could be even more. So you're earning minus 2% a year. That's like running on a treadmill and thinking you're traveling the world. Meanwhile, the S&P 500, that terrifying stock market, has averaged around 10 to 11% a year over the past 50 years. Even after crashes, even with pandemics, wars, recessions, all of it. So let's say you put $10,000 into a savings account at 4% for 30 years. You'll get around $32,000. Not bad. Now, put that same 10,000 into the S&P 500, 10% over 30 years. That grows to around 175,000. So I ask again, so what's actually safer? The thing that grows or that shrinks quietly while telling you, but it's secure? Let's talk Barclays. Big building, fancy logo, helpful staff. But behind the scenes, it's been fined billions for interest rate rigging, FX scandals, you name it. It's changed CEOs more times than I've changed trading strategies. And we're calling that the safe place for your life savings. That's like hiding from the rain under a paper umbrella. Now, let's compare it to the S&P 500, which is 500 companies. Not one, not 10, 500. Even if a few fail, the rest carry on. It's like betting on the entire economy instead of one dodgy horse. So why don't people invest? Why does the stock market feel risky, even when the data says otherwise? One word: school. We're taught about algebra, photosynthesis, Henry VIII's wives. But investing, pensions, inflation, nada, nothing. So we grow up scared of the unknown. And when we don't understand something, we avoid it. And when we avoid it, we call it risky. Here's the truth. The stock market isn't scary. Not knowing how money works, that's scary. Inflation is scary. Losing buying power every year is scary. Retiring with less than you need because you played it safe, that's terrifying. Let me give you a quick example from my own journey. I've started with $25,000. I used option strategies, invested in quality stocks, and kept a long-term mindset, and I've turned that into over $100,000 in only 12 months. Not gambling, not by YOLOing Tesla calls, but by learning, by trading like an investor, by owning businesses, not tickers. No, I don't shove it into a Barclays ISA and pray for that 3.5%. What I did wasn't magic. It was just doing the opposite of what we've all been taught to do. Because the truth is, you're not going to build wealth just by saving. You've got to put your money to work. So maybe it's time we rethink what safety really means. If inflation is eating your cash, if savings accounts can't keep up, if banks, just businesses, and even they can go bad, then is safe really safe? Or is it just comfortable? Maybe safety is knowing your money grows. Maybe it's being diversified. Maybe it's investing in something that stood the test of time, like the S&P 500. Because if that ever does go to zero, Barclays would have gone bust long before it. So keep it in mind, and the next time that somebody tells you they're keeping their money in Barclays or any other bank because it's safer than investing in the stock market, smile, nod, and maybe give them this video to watch. Because financial fear, it doesn't come from risk. It comes from not knowing how the game works. And once you understand the rules, you stop playing scared. If you found this helpful, hit that like button, subscribe to the Options Brit, and let me know in the comments what you used to believe about money before learning the truth. I'll see you in the next one. And remember, none of this was financial advice. This is all just for fun. Thanks, guys. See you in the next one. Bye for now.